PepsiCo reported quarterly financial results on October 8, 2024, that reiterated consumer trends being felt across the economy in 2024. That is, that higher prices are leading to lower unit sales, but still increasing profits because of those higher prices are increasing the profit per sale, even if the total unit sales are falling. So I'm going to review PepsiCo's latest financial results and update my buy recommendation for Pepsi stock and let you know if I think the stock is a buy, hold, or a sell. So let's take a look at the details.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, PepsiCo reporting organic revenue growth of 1.3% in the third quarter, which brings the year-to-date total to 1.9%. Also, the company reporting core earnings per share increases of 5%, and that brings its total year-to-date earnings per share increase to 7%. Now, when evaluating a company like PepsiCo and Coca-Cola and Procter & Gamble, etc., these large consumer goods companies that have several branded products in their portfolio, it's more informative to look at their organic numbers because these exclude the impacts of divestitures and acquisitions, and these companies are frequently adding products to their portfolio and removing products to their portfolio, so it gets a better informative value by looking at the organic number because it excludes the additions and subtractions of new brands. And so you get to evaluate how existing brands are doing year over year compared to the last year, the same quarter. Are sales increasing or decreasing? Are profits increasing or decreasing on a like-for-like basis? So that's why I've looked at the organic numbers and not the GAAP numbers that PepsiCo has reported above. Management saying that their businesses remained resilient in the third quarter despite subdued category performance trends in North America. Strong cost controls aided our profitability as we made incremental investments to improve our marketplace competitiveness. So let's take these one at a time. First, the company saying that there's some headwinds in North America. Consumers are pulling back. The several rounds of price increases from PepsiCo on all of its products have started to bite. Consumers are finally saying no more. They're finally pulling back. I'm going to share with you a little bit later in the video the company's comparison between price increases and unit growth. And for the first time in a long time, in 2024, unit growth is actually decreasing. Consumers are finally buying less after all of these price increases are weighing on consumer balance sheets. Now, for the balance of the year, the company says they will continue to invest in commercial activities and brand support to stimulate consumer demand. Now, when PepsiCo talks about investments in their competitiveness or investments in the brand, what they typically mean is advertising and promotional activity to support brand awareness. So more commercials, more shelf space, more creative promotional activity to increase awareness of the company's products, to increase desire for purchase, right? If you see someone drinking Pepsi Cola in a commercial and you're going to go to the store later that day, that makes you more likely to buy Pepsi. And if you were already going to buy Pepsi, if you saw a commercial before you went to the store, maybe you buy a little bit more than you were expecting. And the same can be true for the portfolio of PepsiCo's products. Now, given their performance to date and their outlook for the fourth quarter, they now expect to deliver a low single-digit increase in organic revenue, where they previously thought they were going to increase organic revenue by 4%. So these are specific differences that make a large impact for PepsiCo stock investors, whereas maybe for other companies, this small difference won't make a big impact, right? So what PepsiCo is saying, previously we thought we were going to grow revenue by 4%. Now we think we're only going to grow revenue in the low single digits. Low single digits means 1%, 2%, or 3%. So it's going to be below 4, somewhere between 1 and 3%. If you want to look at the midpoint, that would mean 2%. So a decrease in the expectations of organic revenue growth of approximately 2% for PepsiCo for 2024. So for a company like PepsiCo, that's a big deal, right? Because for the year to date, they've only increased revenue by 1.9%. So this is a company that 1 or 2 percentage points makes a big deal. They're not going to grow revenue in the double digits annually at any point again in their future. They're a large, mature company. So for PepsiCo to grow revenue in the mid single digits, that could lead to profit growth in the low double digits. And that would be a great return on investment for investors in a relatively safe stock. All right, some investors might be surprised to see that PepsiCo makes more money from its snack segment than it does from beverages. So here they have a breakdown: net revenue and operating profit from their variety of products. And you can see PepsiCo Beverages in North America generated 19.86 billion in revenue in the 36 weeks that ended September 7th. And the profits on that was 2.4 billion. Whereas if you look at their Frito-Lay segment in North America, they generated 17.438 billion in revenue, and they generated $4.7 billion in operating profit on those fewer sales. So that segment is considerably more profitable than the beverage segment in North America, which might surprise some investors to hear that about PepsiCo. All right, so I told you that I would share with you the differences, the impacts of price increases and unit sales. And let me draw your attention here to Frito-Lay North America first. Effective net pricing of 0.5%. So they increased prices by 0.5% compared to the same quarter last year. And organic volume dropped by 1%. So people purchased 1% fewer items this year compared to last year. Just units, right? We're not talking about total dollars spent. Similar trends for PepsiCo Beverages in North America, where they increased prices again by 3% in the latest 12 weeks compared to the 12 weeks that ended last year, September 7, and unit sales dropped by 3%. Overall, net pricing increased by 3% for PepsiCo, while unit volume decreased by 2%. So finally, consumers are saying enough is enough. We're not going to pay these higher prices for your products, or not as much. We're actually going to decrease our purchases if we're going to increase prices. And this is now the first I'm seeing this with companies like PepsiCo, and I've seen this with companies like Nike and Starbucks and other consumer goods companies that are finally starting to feel the pushback from consumers. Finally starting to see consumers say, no, thank you, we're not going to buy as much. And I've been waiting for this because these price increases have been significant. These products are 50%, 60% in some cases priced higher than 2019 levels. So inflation has really bitten these companies, and they've passed those pricings along to consumers, which are now facing those higher prices and saying, we're going to buy less of this product. So PepsiCo's forward price to earnings now is down to 20.13, and it's trading at roughly lower than average valuation right now compared to the last 3 years. On this metric, you can see the valuation trending lower here for PepsiCo, and several factors are contributing to this, one of which being that PepsiCo was absolutely thriving during the pandemic as people were spending more time at home, consuming more snacks and beverages at home, and that all played to PepsiCo's strengths. But now that people are spending more time away from home, making up for lost time, that hasn't worked well for PepsiCo. And then on top of that, you've had other trends that have weighed down on PepsiCo's profits and weighed down on investor expectations for PepsiCo, including some healthcare issues. The new weight loss drugs are creating some investor concern regarding companies like PepsiCo, as it's reducing the amount people consume. And so longer term, could that be a headwind for PepsiCo? I think so. I don't know how much so, but I think it's going to be a headwind for PepsiCo's overall consumption trends in the long term. So that's also interesting to consider. So I've had PepsiCo stock rated as a buy for a very long time. I last updated that recommendation on July 11th, but I'm not happy with the trends I'm seeing in consumer behavior, especially as it relates to these consumer goods companies. I recently downgraded Coca-Cola stock as well. And in this video, I'm downgrading PepsiCo to a borderline buy from a straight out buy. And I'm updating that recommendation here October 11th. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.